As real estate prices continue to rise, some are asking, will this ever stop? You came here for the truth, so let me unveil that for you. I've got an interesting video today. We're going to look at a few topics that will be important to you specifically. The first thing I want to cover is house and rent prices. They have been accelerating at a pace we've never seen before. You'll look at consumers, number two, consumers and what's happening with them. Of course, this affects them not just in their house and their rent, but on so many different levels. And then we need to talk about three, hot commodities. Hot commodities going on. It's not just lumber that was really hot a little while ago. We're looking at the next one today. I'll show you that and so much more. Let's begin. The repo crisis continues, and you could see right now directly from the Federal Reserve's own website, $841 billion for a reverse repo operation. I'm pretty sure that's the highest we've ever seen before, and we are counting down the days until the $1 trillion one comes around. Of course, I'm going to keep you up to date. Now, I wanted to start by taking a look at what's been happening with the mortgage rates. As you can see, this chart goes back just basically over the past few years. And, as time has moved on, where I have my cursor right here, you might be able to see that. But essentially, we're looking at about 2018, end of 2018 or so. And you had mortgage rates peaking out in the United States, 30-year fixed at approximately, almost 5%. It was there just for a brief moment, and it has been declining ever since. However, over the past few months, it had climbed from its bottom. It was at 2.65%. Since then, people have decided to refinance their properties. They've been taking advantage of these low rates, and for good reason. But you look at the direct effect of these mortgage rates and how that has impacted the prices of homes, and the connection is very clear. So we'll talk about that some today. I've got a lot to cover, and consumer confidence is one of those topics. U.S. consumer confidence at 16-month high. House price inflation is heating up. You didn't need to hear that from me. I know that everybody has been talking about this. You're looking around, you see the for sale signs, and there's always above asking price is seemingly the very, very typical situation that's been happening. U.S. consumer confidence jumped to its highest level in nearly 1.5 years in June, as growing labor market optimism amid a reopening economy offsets concerns about higher inflation. They've actually gone away from the concerns of higher inflation. I'll show you more about that if I have time today. This is directly from the Conference Board's own website, just showing you the Consumer Confidence Index improving further in June. Okay, there's more data, more numbers if you want to check it out. But I think it's just showing you what's been happening. They're at the best numbers right now since the beginning of January 2020, that time frame. So you can see that the consumers themselves are appearing to be in a better position than they were previously, at least according to the index. This is the United States consumer sentiment, just showing you a different chart over the last year. And the trend, while it's up and it's down and so on, the trend is clearly up. Consumer prices increased 5% for the year ending May 2021. This acceleration here is, as far as I'm concerned, very worrisome. But if you look at the general people in the media and the analysts and so on, they see price increases as a net benefit because higher prices mean ultimately higher GDP. But they don't get the fact that, okay, if you've got to buy something, it's going to be more expensive, and maybe that temporarily boosts the GDP, but that just means less money for people in their pockets. So how is that a benefit? But that's the way they see this. Take a look at this. This is the S&P Case-Shiller Home Price Index, and you just look at it month after month after month after month, increasing to levels we have never seen before. Okay, I've got a lot of charts around this, in fact. U.S. housing prices jumped the most in more than 3 decades. And the pace at which it has been rocketing higher has been incredible. US home prices jumped the most in more than 30 years. Nationally, the Case-Shiller Index climbed 14.6% from a year earlier. And I do believe I have a chart on that as well. That's the biggest gain in data going back to 1988. Okay, and we're talking about a 13.2% increase in March. So it's actually accelerating year over year. This isn't a healthy sign. You can make any argument you want, but it's not a healthy sign to see it go in this direction. So many people are asking, is it going to stop? I mean, there's no danger. This isn't a subprime crisis. So why should I worry? Why shouldn't we just put more money in? And I get it. I understand. But you've got to look at it on a deeper level and understand what is causing this to happen in the first place. At the same time, when you are saddled with debt, no matter what the monthly payment is, when you've got $1 million in your mortgage, what do you think that's going to do for you long term? These people are simply going to be indebted, debt slaves for the foreseeable future, and I would argue perhaps the rest of their life. April's performance was truly extraordinary. We have previously suggested that the strength in the U.S. housing market is being driven in part by the reaction to the situation from 2020 as potential buyers move from urban apartments to suburban homes. April's data continue to be consistent with the hypothesis. Look, those people would have done that already. People are moving back into the cities, and that information is evident when you look at what's happening in the condo market. This is just showing you, I pulled this from the FHFA.gov website, and you can see 15.7%, the red line on the left-hand side. That's the price change year over year. It's going crazy, okay? You're seeing this right now at a time in which it shouldn't be this quick. It should not be going up this quick. I mean, it's a simple matter of fact. We're going to touch on some heavy points in the Money GPS insights, but take a look. Rent surges on single-family homes with landlords testing the market. That's right, because for a period of time, you had these prices at extremely low levels for condos, and you had the rents very low as well. So you looked at the rents, and that, by the way, goes for anything, but particularly in the condo market, and a lot has changed just in the last, let's say, couple months. Okay, this article does talk about it, but I think you get the picture with that. There's some more data in here. Obviously, I'm not going to cover it all. You will fall asleep. Rents and other single-family property revenues increased 8.8% to $300 million for the first quarter of 2021 from $287 million from the first quarter of 2020. And you go down the list, and basically it's all what you would call bullish. It's all what they would suggest to you as being healthy. But we're talking about something else I'll tell you in the Money GPS Insights, but you cannot sustain this. And I think that's the big issue. This is just showing you the Case-Shiller 20 City Composite Index, and it obviously bottomed out here in the beginning of 2009. It's been up and down ever since, but you can see that the acceleration is something like, you don't find that. We're going back to the levels that we saw during the subprime, that whole euphoria. We got to get in right now. 1 year price change percentage by metro area, March and April 2021. The blue line, by the way, is April. And you could see Phoenix at the top of the list. Underneath that, San Diego, Seattle, Boston, Dallas, Tampa, and you go down the list. This is truly unprecedented when you look at the amount that these cities, the price increases in these cities we have been witnessing, especially as they note here in the chart, when the Federal Reserve is telling you, when the government is telling you that inflation is at 2%, it's at 3%, it's at 3.5%, depending on which metric. Are they not including rent? Are they not including actual home prices? Are they not including food prices? No, they figure out a way to simply flatten it all and make it digestible. If you haven't already, you definitely want to sign up to the Insiders. The Insiders is my way of getting to you. When you sign in, you're actually going to get this PDF. It's called the 7 Critical Tips of Financial Education. This will be informative perhaps to you, or if you know it already, it's something that you could send to people and inform them, because it just gets into the basics. It talks about investing. It talks about moving averages. It talks about taxes and so many other things, but just a snippet so people can learn a few things and start to ask more questions. So definitely check that out. It's available to you at themoneygps.com. Thank you for sticking around for the Money GPS Insights. Number 1, we are seeing house prices accelerating rapidly like never before. Number 2, new home buyers, first-time home buyers simply cannot afford a home today. Number 3, this is the big one that I've been trying to hint at, is that we are borrowing from the future. We are borrowing the growth from the future. That is completely unsustainable, and it is truly unwise. Slower and steady growth would be optimal, but that's not how it works. We have boom and bust cycles thanks to the central banks. This was just another chart that I wanted to show you. Springing into a record, U.S. home prices post the largest annual gain in data going back to the 1980s. It's just giving you some more insight there. Take a look at what's happening with cars. Car dealers are selling more vehicles above the sticker price. This is crazy. If you remember 2019, I was covering this. There were so many cars available that they had them on the containers, on the ships, and they were simply waiting. Why? Because they didn't know where to put them. There were so many cars, they literally didn't have a place for them. Okay? Now the story has completely changed. Take a look. Commodity traders make billions as oil, copper, and battery metals prices rise. I have been talking about this since last year. Remember, the joke was basically don't buy 7 shares of Amazon, buy 7 2x4s. And essentially that was my way, the Money GPS way of saying the trade is going away from the Amazon and it's moving into commodities temporarily. And that was exactly what happened over that period of a year. Now, if you look at things like lumber, that has come down. But check this one out. It's steel. Steel has been going berserk. And you could see this right here is just off the hook, if you want to use that term. I mean, this is given us from back in May, and you could just see it's just straight up. This here is unbelievable, but some are saying that just like lumber, the prices may be due to turn around. We'll see. I'll look at the demand. I'll give you any updates that I can. This right here is the sentiment cycle coming from Real Investment Advice. And you can see how it just goes around. First, you have the enthusiasm, then it moves into the panic, and then we have discouragement, and then returning confidence. And this continues to repeat over and over again. Now, because of the Federal Reserve, things, I believe, in my opinion, have been completely skewed. And last but not least, the Great Resignation gains steam as return to work plans take effect. Many people are starting to say, maybe I'm not going to go back to work. I don't want to be in that office. I want to be at home. Now, a lot of businesses are starting to suggest, you can work at home part-time and so on, but for some people, they don't even want to go back. I want to know what your opinion is. Put it in the comments below. I appreciate that. If you found the video informative, hit that thumbs up button. Thank you very much. And if you haven't seen this video already, you definitely want to check it out. Click it, and I'll see you there.